Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition. Our focus is on the Q3 earnings of Biocon Biologics, which has reported a year-on-year growth of 65% for Q3 of FY24, with the revenues coming in at 2483 crores. And the EBITDA for the quarter has also reported a strong growth of 98% to 714 odd crore rupees, representing an EBITDA margin of 29% during the quarter as well. We've also seen that the net R&D investments have stood at 265 odd crores, which is representing 11% of the Biocon Biologics revenue for the quarter too. Now, importantly, the company has also announced that it has now tied up with Sandoz Australia for cancer biosimilars as well. To discuss with us more insights from the quarterly earnings as well as an outlook going forward, I now have the top management of the company with us. Shreehas Tambe joins in. He is the CEO and MD of Biocon Biologics. Welcome, Mr. Tambe. Thanks a lot for taking the time out for speaking to us post your results. First up, tell us more about the Sandoz Australia tie-up that you've done, and then we'll come down to the earnings as well and the details, because this sounds exciting. This is for cancer biosimilars that you have announced a 5-year partnership with Sandoz AG to sell cancer biosimilars in Australia, and this is following the recent establishment of your strategic partnership with Sandoz in Japan as well. So tell us what is the importance of this tie-up, and how do we see this aiding to your growth and top line going forward from here?
Thank you very much, Sakshi, for having me on your show, and that incidentally is one of the highlights of the quarter. It's a great development which follows the completion of our integration globally. So this quarter, as we had announced earlier, we completed the integration of the Viatris acquired business that we had announced last year. In the last wave of countries that we transitioned over 30 countries in Europe, Japan, Australia, New Zealand, South Africa. There were several other countries that were transitioned towards the end of calendar year 2023. Australia and Japan are, of course, strategic markets for us. Sandoz is not a new company for us. We've partnered with them in the past. They're a global leader in many places. They compete with us, but they also are very strong partners. It made sense for us to partner with strong companies like Sandoz in the region as we acquired them, because our business model is such that we would be very flexible. We would be fully integrated, lead products in markets where we believe we have the strength, and partner with strong local commercial teams which can allow us to gain better traction for our products and serve more patients in those geographies. So Australia with Sandoz is that example. And likewise in Japan, where you need very strong local presence. I think these are two excellent examples where we've found a hybrid working model to commercialize great assets that we have in our portfolio and bring value to patients as well as to our customers.
Okay. Let's also talk about the core business as well. You've reported a 65% growth in revenues this time around. You've also reported that you've seen robust demand of your products, your market shares increasing across geographies as well. Tell us what have been the key highlights in terms of the financials for you. Have they met your expectations? Do you see a sustainable move going forward in Q4 and the other quarters of Q1 as well? And tell us whether there is a room for further improvement on the key financial parameters.
Yeah, that's a great question, Sakshi. And I should tell you that growth is an aspect which we can focus on. But the last 12 months has been very critical for us to maintain business continuity. When you go from a company which is present in 2 countries to being present in 120 countries,
yes,
the risk that you run is that you can drop the ball. And I think what I think we should be very proud of is that the team's really been able to preserve value in the deal, make sure that they've been able to grow market shares across geographies. So the growth that you see year on year has come on the back of growth of all our oncology products in the US, on the insulin glargine product that we've got in the US as well. And then if you look across the other side of the Atlantic into Europe, you will see that almost all the products, we have 7 biosimilars approved in the US, and in Europe, and you're starting to see them pick up market share. So that is really the first piece where preserving value was of core importance for us. And now the focus is going to be consolidation and growth as we enter into the next part of our journey.
Yeah.
Now, whether there is headroom, which is the second part of your question, I think the strategy in the US is the FDA unlock. Unless we get the FDA approval, new product launches are delayed, and we want to make sure we focus on that. But in Europe, if you look, we've got 7 products approved, but the presence only up until now was in 2 countries. And we want to see that we take these products in the remaining countries. We won't go to all 30 maybe at the beginning, but starting with the EU5, we want to make sure we grow that presence across Europe. And the other part is we've got products which are not being commercialized beyond adalimumab or a couple of others. We
Yeah.
want to see how we can grow those products in the other countries. So that I would say is the headroom for growth going forward.
Okay. You also mentioned in another exchange filing that US FDA has issued a complete response letter for the license application for bevacizumab. The letter, however, has not identified any outstanding scientific issues on the dossier. But if you could give us more insights on what this means and going forward, what do we expect?
Yeah. So for any biosimilar or a biologic product to get approved, there are two different phases. One is the review of the science, which is through the dossier, and the other one is the on-site GMP inspection, which has to be conducted before it's approved for use. And the FDA has consistently said that there is no outstanding question on the science, which means the approvability of the product, the way we've designed the biosimilarity, they have no outstanding question. The aspect is only related to them coming over to the site and inspecting us to see that we've completed all the actions that we had committed to them and they are effective. I think that inspection is what is awaited. And until then, if it doesn't finish before the date that they've identified, then you get a complete response letter. So we are in receipt of that, and now we will look forward to them coming and be ready, of course, for them to come and visit so we can get these products to patients.
Okay. With respect to your acquisitions, you've also managed to reduce some debt on the books as well to the tune of $200 million. How would you really look at the debt picture going forward from here now that the integration is largely done? Would you look at further reduction going forward? What are the means of, you're going to be employing for further reducing debt, if at all that's on your radar?
Yeah, and I think this has been an important question on the minds of several folks who've looked at us historically. And if you look back at our history, Biocon's never been a leveraged company.
Yeah.
We've never had debt on our books. We are at a transformational phase with a once in a lifetime kind of an opportunity when this came up for the acquisition. So the debt that you see is largely on account of the Viatris acquired business. So that's when we really got into a debt. And what we are seeing now is that the opportunities that we get through any contractual receivables that we would have, we're looking to pay down debt. And we've reduced $200 million ahead of time, which basically shows clear intent that we are looking to reduce our acquisition debt as early as possible, even ahead of time. And that is something we had said even in the past, and we are delivering on that. The second piece is we have other options available to us, which, of course, we will continue to pursue in terms of how we raise funds. But the key thing here is that we are confident that we can service the debt levels as they stand today. But we are looking to consciously bring this down every quarter, and that has really been the effort.
Right. Mr. Tambi, FY24 has really panned out for you as a pretty eventful year. A lot of integrations happening, a lot of acquisitions happening for you. And I want to understand from, the next financial year's perspective as well. How do you see growth really panning out for you? Is FY25 really looking better for you in terms of when you compare it with FY24? What are the growth levers that you're going to be betting big on for, looking ahead into the new financial year?
Yeah, I think the first thing is, like I said, the year 2024, which is going to be ending in March 2024, has been, as you rightly said, very eventful. We had a 2-year runway for transitioning the business. We accelerated that to 1 year. So clearly, it's been a very busy time at Biocon Biologics, as you can imagine. So that's certainly been a very eventful, a very hectic kind of a year. Now, once we've gotten past transition, we preserved value, focused on business continuity, the time's now to consolidate the acquired business into what Biocon Biologics is, and then set up strategies for growth in the coming years. So the next phase, Sakshi, is where we begin in the coming fiscal year. The
Okay.
unlock for the US is the FDA approvals and making sure that we gain traction in the markets that we are present through Europe, where we have certain products approved. So that's going to be the next phase of growth as we switch gears from preserving value to consolidation and growth.
Wonderfully said. And my pet question that I always put across to you to understand the listing timeline or the launching of the IPO and listing of biosimilars business, is that looking closer than you have imagined as a timeline for you?
Yeah, and I've refrained always from talking about timelines because in my mind the real triggers are how do you create value for all stakeholders, and the first way to do that was to make sure that we were in control of the business. Having acquired a business is not enough. We wanted to make sure that we had visibility to the future,
Yeah.
and that is what we've accomplished in fiscal 24. I would say that is a foundational year that's allowed us to now take control of it. As I said repeatedly on the call, now we need to open up new markets, particularly in the US for new products. That's the unlock that we're looking for. And as we then consolidate this, we will then have more clarity to provide to you on when that liquidity event comes up, because then you'd have created a more stable, predictable business, which then can create value.
Fair enough. Point well taken. Thanks a lot, Mr. Tambe, for speaking to us on Business Today TV and helping us with insights from your quarterly earnings and the outlook that you have going forward from here, and the focus that the company will be having going forward into the next few quarters as well. Many congratulations, on the new deal that you've done, as well as on the earnings as well. All the very best for the upcoming quarters, and we shall hope to get more interactions with you to understand more about the business. Thank you.
Thank you, Sakshi.
All right, with that, we wrap up this very special conversation with Mr. Tambe of Biocon Biologics, and the way he's confident of which way is he going to be driving the company going forward from here, the clear focus that the company has in exploring newer markets and ensuring that whatever has been integrated of the recent acquisitions is getting a firm footing going forward from here and meaningfully contributes to the financials going forward. Many thanks for joining us onto this special edition, but many more conversations will follow soon as far as earnings are concerned. So do stay tuned. The entire day is going to be action packed for you on Business Today TV.